Welcome to the Deerwood Realty YouTube page. I'm John Schink. How are you today? Well, are you a home builder? Because if you are, apparently you're not in a great state right now. Let's get straight to the article I have for you today. This is from the National Association of Homebuilders, and it says, mortgage rates well above 7% continue to hammer builder confidence. Well, I could see how that's the case. Now, I haven't seen anything about like land and how much land is going for. So I don't know about new developments right now, but the high interest rates are causing massive problems in the housing industry. If you weren't aware, it says it starts off stubbornly high mortgage rates that have climbed to a 23-year high and have remained above 7% for the past 2 months continue to take a heavy toll on builder confidence as sentiment levels have dropped to the lowest point since January of 2023. Well, the good news, not really, is that the rates are up to over 8% on a 30-year fixed. So a lot of people were saying that there's going to be a soft landing. I don't know. I don't even know what that means. They were saying that if you bought a house, you don't worry about it because, 6 months from now, you'll be able to refinance at a much lower rate and everything will be good. That was probably one of the bigger lies that I've seen told in a long time. It says, this is the third consecutive monthly drop in builder confidence. And, the way it's been lately is that the only really way to go has been buying new construction. But you have to be able to afford to buy new construction. Now, that's been a little tricky, but we'll get into that in a minute. Let's continue. It says, builders have reported lower levels of buyer traffic as some buyers, particularly younger ones, are priced out of the market because of higher interest rates, said National Association of Home Builders Chairman Alicia Huey, a custom home builder and developer from Birmingham, Alabama. Well, let's break this down. Have you ever been to a new home development? I swear, it's 70% young people. I don't know where they find the money, okay? It's 70% young people, 30% people that are maybe in their 50s and older. And it's just a wild thing to see, just to see what a new development is. At least where I'm at in St. Louis, I don't know where it might be different where you are. Like I would imagine in Florida, it's probably not that way. But anyway. It says some buyers, particularly younger ones, are priced out of the market because of higher interest rates. That's fair. Higher rates are also increasing the cost and availability of builder development and construction loans, which harms supply and contributes to lower housing affordability. Yes, I would think that is problematic. I don't believe that there's a fixed debt structure for development. Like, I believe that's floating, okay? Now, I could be wrong, and please, if I'm totally wrong, put it in the comments. I don't believe that I'm all-knowing. But with the inflation we're seeing, is it any wonder that people that are developers that tend to try and divine the future, is it any wonder that they might have problems with confidence right now? It says, since late September, mortgage rates are up nearly 40 basis points to 7.57%, according to Freddie Mac. Well, now they're up to, 50 basis points? More? It's not good. It says the housing affordability crisis can only be solved by adding additional attainable, affordable supply, said National Association of Home Builders chief economist Robert Dietz. Boosting housing production would help reduce the shelter inflation component that was responsible for more than half of the overall consumer price index increase in September and aid the Fed's mission to bring inflation back down to 2%. However, uncertainty regarding monetary policy is contributing to affordability challenges in the market. Let's take the last part. However, uncertainty regarding monetary policy is contributing to affordability challenges in the market. Now, you may remember from one of my earlier videos that the National Association of Home Builders, along with the National Association of Realtors, and I think it's the National Association of the Mortgage Bankers Association. Those three industry groups wrote a letter to Jerome Powell that said, hey, look, man, basically, I'm summarizing, would you please stop raising rates and would you please lower rates, or at least would you tell us what you're planning on doing ahead of time so that we can position ourselves accordingly. And to my knowledge, Powell didn't write back. The love letter was not returned. So I've never thought that the issue is uncertainty regarding monetary policy. Okay, the Fed to me has been very clear that says they're going to break the inflation. To do that, they're going to break employment. And if the commercial real estate industry, banking industry, and residential construction, at least new homes, are destroyed, that's totally okay because we need to get inflation down. Regardless of whether or not you believe that's a good policy, it is the policy they seem to be telegraphing. Now, it says the housing affordability crisis can only be solved by adding additional attainable, affordable supply. This is where I disagree. I think that there's many, many pockets of supply in the United States that are currently being used by short-term rentals. And I think that should that market collapse, that there will be plenty of supply. But I'm also a fan of, I have no problem with building more units. I have no problem with that. So as far as it would help reduce the shelter inflation component that was responsible for more than half the overall consumer price index. Look, if you think that somebody just starts like, hey, I hadn't thought of this, I'll just go build new houses tomorrow, right? If you think that what we're seeing right now can be solved by something we do right now, right today, we just snap our fingers and 1 million new units come online. If you think that that's going to fix the problem, or if you think that's even doable, we're in just disagreement. So as a result of the extended high interest rate environment, many builders continue to reduce home prices to boost sales. Now, I have not seen that in my area. I've seen continually high prices in new construction. It says in October, 32% of builders reported cutting home prices, unchanged from the previous month, but still the highest rate since December of 2022. Okay? Now, that may be because I'm in a certain market. I'm in the Midwest. If I was in the Southwest, maybe it's a little different. Maybe that's certainly something to pay attention to. But what I have seen is the next. The average price discount remains at 6%. Meanwhile, 62% of builders provided sales incentives of all forms in October, up from 59% in September, and tied with the previous high for the cycle set in December 2022. So for the longest time, if you want to go buy a new house in the last 2 years, you go to the builder and you say, hey man, I'd like to buy a house. And they're like, here's the price. And you say, can I get free cabinets or something? They're like, no. You're like, maybe some chocolates when I move in. No, we're not giving you anything. So it was very, very much no incentives. Now, and I got to take a picture of this for Twitter. I haven't gotten around to it yet, but even in the developments that's close to my home, there is a rate buy down program for, I believe, 2 years. So rates right now, let's go with 8.2%. Okay. On a 30-year fixed, they'll come in and they'll buy down the rate to the sixes, like 6.7, 6.6 for 2 years. Now, the only problem with that is you still have to qualify as a buyer to the highest rate, because it's just going to be an interim buy down. It's going to be for 2 years. That's the incentive they're offering. I looked. Here's how I will know that things are not going well in the residential market right now, because what's been holding up all of the residential section lately has been new construction. When the developers pivot to lower prices, then we'll know that things are really, really bad, at least in my area in St. Louis. Now, it may be different for you. They may have already done that. They may have already capitulated. But anyway, I wanted you to see that article. I thought it was relevant to the situation we find ourselves in today. Many people want to buy a house, but what's available is garbage as far as, it's an estate home. It's not a home that's all fixed up, because those people aren't moving, right? If you don't have to move right now, who's taking on an 8% rate on a 30-year fixed on purpose? I expect this to continue for quite some time, and we will track it. But, I'm always optimistic. I'm always hopeful that in the future we'll see we'll see the market unfreeze. Anyway, that's what I have for you today. Thank you for watching. Thank you for listening, and I'll catch you on the next one.